And welcome back to halftime. Apple has erased nearly all of its year-to-date losses, with shares within 5% of a new all-time high. That rally helping to power the rebound in all the major averages, as Apple's the largest single stock weighting in the S&P 500 and the NASDAQ 100. Josh, coming over to you. You own Apple. Everybody here on the investment committee does. But what do you make of Apple's comeback, especially with reports of an iPhone and Apple Watch event coming up in September?
So what we know is that this has been a very tough stock to sell, because every time you sell it, you are trading against one of three counterparties. The first one is an index fund. Apple is in every single major index. It's a value stock. It's a growth stock. It's a dividend stock. It's a shareholder return stock. It's an innovation stock. So it's in the Dow, it's in the S&P, it's in the NASDAQ. It's the largest component of all three. So this has really been a tough situation for sellers, because if they're not selling to an index fund, they're selling to Berkshire Hathaway. Berkshire bought 4 million more shares of Apple. Why not? In the second quarter, I guess just to top off their holding. And then the third potential buyer when you sell Apple is Apple itself. The buyback is like historically large, and there have not been a lot of opportunities where the stock has been down that much. And a lot of that is because Apple is not out there making massive acquisitions. Apple is taking a lot of their free cash flow and retiring stock. So when you have Berkshire, every index ETF, and index mutual fund, and the company itself taking your stock off of your hands, doesn't leave a lot of room for this stock to post a big decline. As a result, relative strength for this name is incredible, continues to be. Could that change at some point? Absolutely. What changes it? I don't know.
So, Brent, you own Apple as well. Surprised at all by the rally we're seeing?
No. You know, if you look going back past 5 years, you know, Apple's up around 340% versus the NASDAQ's at 130 and the S&P at 70-something on a cumulative basis. So Apple has literally brought these other indices along with them. I think that that's going to maintain until it doesn't. It is reminiscent to the late 80s. You know, IBM in the late 80s, I think, got up to like a 6.5%, and it had been there for quite a few years. And so I think, you know, Josh hits on really all the salient points. It's like it's everywhere, and also we all own the product. So I do think that you're not going to see any broad selling in Apple until something changes. I mean, the way I view it is I own Apple, but at the same time, we sold the Qs and bought JEPQ, which actually owns the NASDAQ 100. It sells 3 to 5% out of the money calls, because I think in general returns in technology are not going to look like they did the last 5 years. And I would rather have some of my return be capital appreciation and some of my return be premium from the calls.
Brent, you also own Meta and Microsoft. So do you think that Apple's rally means anything for the broader tech sector?
No, I mean, I think you're seeing, you know, I said earlier this year, I think that FANG story, that group of stocks is really dead. And obviously, you know, Facebook is reinventing itself, versus Microsoft and Apple are just continuing to get stronger and stronger. So I think definitely, you know, security selection going forward looks very different, very different than it did in the past, because Facebook is still trying to reinvent itself. It's still cheap, and the jury's still out if their metaverse is actually going to monetize anytime soon. So I think investors are going to probably stick with the Apple and Microsoft, and just the value folks are going to be in the Facebooks, you know, that Facebook type name.